Gentlemen, thank you. Let's get right into it. Jose, you guys have some big news today.
Yes, we have just announced that our stablecoin PayUSD that we launched a few weeks back is now available on Venmo too. So the tens of millions of users of Venmo can
Stablecoins and Venmo.
It's a big deal. It's a big deal. As you know, we have been involved in digital currencies for the last 4 years. And the promise has always been, how can we use this for payments? How can we make it useful? And for the first time, you might know that PayPal and Venmo have been sister companies, sister products for 10 years, and you could not send value from one to the other. Actually, the first time that a value moved from a Venmo wallet to a PayPal wallet, believe it or not, was Bitcoin a few months back when we enabled on-chain transfers. So now you have tens of millions of users on one side, tens of millions of users on the other side, being able to send to each other, which is something that our consumers were really, really asking for. And it doesn't stop there. So PayPal to Venmo is fast and free, and there are not even network fees. But for any wallet out there, any exchange out there, that means that now they can receive a stablecoin that comes from our tens of millions of users.
A long time coming. Can we talk a little bit about how the partnership came to be? Because obviously PayPal is a pioneer in payments. And now that you're, I don't want to say one of the incumbents, but somewhere in between the incumbents. And yeah, you're somewhere between like us and TradFi. What's that progression been like, especially in the run-up to the launch of the stablecoin 6 months ago? Just talk about the relationship with Paxos and why you decided to do a white label with them.
So we have known the Paxos team for a long, long time. I think that the first time Walter was in a conference similar to this 5 years ago or
2019.
Like yeah, so they have been fantastic partners for the last years. From our very first product in October 2020, it's a company that we really appreciate. We really appreciate the focus on compliance. The regulatory structure is fantastic to be able to announce this in New York, because we have been big fans of New York as a place to do business on the crypto side, and especially to issue stable coins here. So the relationship has been very tight for many, many years. Paxos is an extended part of the team, and we're just getting started.
Paxos, as you know, is an infrastructure provider, and we're powering a lot of enterprises, and which include Mercado Libre, Nubank, PayPal. And PayPal's been a really important partner to Paxos. If we wind it back to that time in 2019 and you think about what types of companies would be able to do what they did, which was originally launched buy, hold, sell in their wallets across hundreds of millions of customers. We looked across the financial services landscape and technology world as really nobody. And so they were a dream partner for Paxos to serve as an enterprise. And we had this little inkling idea, just a glimmer in the eye at that point, which was, wouldn't it be amazing if PayPal were to really move into the stablecoin space? And I think it is illustrative, based on today it just being a side note, that PayPal has rolled out stablecoin to Venmo with tens of millions of users. If that news were to happen in 2018, 2019, even last year, it would have been the biggest news in crypto. And so what PayPal has done for the space...
give it a minute, like you just announced it, so I'm sure there's a lot of press here that's going to pick up on it. But
what they've done for the space in bringing blockchain to hundreds of millions and what I believe will eventually be billions of users now through their stablecoin really can't be overstated, and it's been great to be an infrastructure provider for them.
I think something that people are starting to study a little bit more, trying to wrap their heads around, is what's the difference between all these things, right? Like, is JP Morgan going to have JP Morgan coin, and Citi's going to have Citi coin, and PayPal's going to have PayUSD, and Circle's going to have theirs, and how do you think about differentiation of stablecoins? Is it at the infrastructure layer? Is it the partnerships? Is it, because at the end of the day, they're just almost like portable deposits depending on who the issuer is. So where do you see most of the growth, most of the adoption? Is it going to basically be every single service has their own siloed and interoperable stablecoin, or what are you most excited about as you roll this out, not just in Venmo but across the PayPal suite, and then extend it to other third parties as well?
Yeah, I'll give you my opinion, which is as valid as anyone else's, I guess. It's purely my opinion. I do think that we will see several general purpose stablecoins. I don't think that we will see 35 general purpose stablecoins, but we'll see maybe a high single-digit number of general purpose ones, and then you will see stablecoins that are specific for specific use cases. And some of that might be interbank settlement, and maybe that's what tokenized deposits are used for, and maybe there is a stablecoin that is optimized for, I don't know, digital goods. Definitely there has to be more competition on the general purpose side. I think that the current state of the industry is very concentrated, and that makes the whole structure vulnerable. It is important that there are more players there. We are happy to contribute to that. And then each of us will find their own differentiation. In our case, obviously the place where we can help is the connectivity to the PayPal and Venmo ecosystem on consumers and merchants, and the connectivity to the fiat rails. I think that everybody in the industry suffers today from difficulties and the scarcity of banking and access to bank accounts, and that's why we're not only in the retail trading side, that's why we have spent so much time building on-ramps and off-ramps to wallets and exchanges and other parts. And again, the stablecoins is a piece of that puzzle. Each of us who are competing on the stablecoin side need to operate both on the crypto space and on the real-life space, and decide how are you going to compete. But we should see more competition.
And then in terms of the growth of this ecosystem, first 6 weeks, what have you seen for PyUSD? I think it was, at least given the size of PayPal, looked like it was smaller growth, but you would argue it's the beta period. I'm not trying to trap you, and I'm trying to be nice about it, not make fun of you for 6 weeks of progress, but what is the tipping point, right? Like how do you, you're not where you want to be yet because you're just rolling it out and you're just kind of working out the initial go-to-market. But what are either the triggers, the tipping points, or what are the kind of success metrics you're looking for the first year of this project, especially now that you've had this big announcement today?
Absolutely. So as you were saying, we announced 6 weeks ago, and when we announced it was a 1% ramp. So basically we have been live in the market for 4 weeks. The emphasis now for us is two things. Use cases, and that's one of the places where the Venmo announcement fits into that strategy, and it's not the last one. We will continue to announce utility use cases. And the second one is distribution. I think that when you look at everything that has happened in the last 4 weeks, the token is live on Crypto.com, the token is live on Coinbase, it's live on Kraken, it's live on Bitstamp, it's live on Ledger, it's live on MetaMask, it's live on Fireblocks, it's live on Copper, it's live on Fortify, it's live on Paxos. There are pools in Curve, there are pools in Uniswap. So the focus for the first few months is let's get distribution, let's make the token available where people want to use the token. And then the asset size, quite frankly, I think that the industry is obsessed with asset size. I think it's a not very healthy obsession that is driven by a few specific circumstances in the market. I care about asset velocity much more than I care about asset size. But we care about asset size enough that say, hey, we need to be at a size where we can influence where the industry goes.
Well, that's interesting that you say that, because Jeremy just said the first half of the year they did 800 and 200 in revenues and profits. So I would say that asset size is pretty important for your board and for your investors, and But how do you think about stable coins and their usage? Because obviously in the interest rate environment that we're in right now, it can be a big moneymaker if you do have a large amount that's been issued. But on the other hand, I'd imagine this has to be a cost savings mechanism for you all, at least in certain use cases. So how do you think about how this kind of scales and like what it will ultimately mean for PayPal as a business, just kind of drilling down on those economics?
Absolutely. So
and the next one's going to you. I know I just asked a few in a row.
You were making reference to the interest rate environment. I think that obviously that is driving a ton of the monetization of the stablecoin space. We are playing the long game here, and I don't think that if you look at the industry 5 years from now, the monetization mechanism of stablecoins is going to be yield on reserve. If it continues to be like that, it's because the interest rate environment continues to be like that, and then we have a different set of problems if 5 years from now we are. Yeah. Remember, let's look back 2 years. So nobody was making any money on yield on reserve on stablecoins. We want to earn our keep on the transaction side. We are a payments company. That's what we know how to do. And that's what we are prioritizing. The cost aspect that you were talking about. If you look at transaction costs on different stablecoins, it's in a range, depending on which protocol you use, is between 1 cent per transaction to 50 cents per transaction. That is, give or take, 26 times cheaper than traditional fiat rails. If you give me a channel that is 26 times cheaper than traditional payment rails, we need to be able to capture value, and we need to be able to give value to consumers and merchants. And that's a royal we. That's not just PayPal, it's the whole industry. So absolutely, the name of the game for us is reducing the cost of payments for the ecosystem and being able to move value faster and cheaper.
So go back over to you. This is the second major white label partnership on a stablecoin. What are some of the key differences? Is it on a partner level? Is it on an implementation level? Like, what is there much difference aside from who the partner is when you think about a new stablecoin and a new white label solution for someone like PayPal versus the previous partnership with Binance?
Yeah, the white label model is really in line with our overall business, which is just acting as the infrastructure, where we as Paxos are never trying to create the relationship with the end user. We just want to serve businesses in B2B or B2B2C types of ways. And on the stablecoin side, that means we're not out there trying to build the biggest brand or all of the stablecoin applications or APIs for developers. What we're really trying to do is enable enterprises to interact with and offer these products. And there's a handful of enterprises in the world. I'd argue that PayPal may be one of the best of them, or the best, that could launch a stablecoin in a way that really changes the whole capabilities of the product. And PayPal does that by bringing trust in their brand, by bringing hundreds of millions of users in an on and off ramp, by bringing utility in their platform that they can enable, like some of these payments use cases, et cetera. And that's really what makes them different as a partner, is that they're able to change the entire ecosystem. Because launching a stablecoin, as you said, they can be commoditized. We do some things very uniquely on the regulatory side, and I think PayPal, having gone down that path, has cemented that as the new standard for stablecoins in a time when we're likely to see a bunch more. Mm-hmm. But they bring so much more in what they can offer to build out and create a robust ecosystem, create adoption, and I think that's what's going to create a lot of tailwinds with this product and for the entire stablecoin and broader blockchain ecosystem over the coming years.
And I think when you take a step back, it's obviously super exciting partnership, and some of the developments today. I think I'm excited to use. I know it was embargoed until like 2 minutes before we were on stage. I don't even know if it's live yet or if it was just announced. But what comes next, right? I know I asked about the success metrics a little bit, but if we could just get a little bit more tangible in terms of like what behavior are you hoping to change, either in terms of a Venmo user or anyone else in the PayPal ecosystem, whether that's percentage of transactions or total deposits and whether they're held in a stable coin that's interest bearing or not. What is ultimately going to be the moving the needle? Because for a company that's again, going back to that kind of middle ground that PayPal occupies between TradFi and kind of like the internet, incumbent, we've seen and heard a lot of pilots in the TradFi realm when it comes to crypto. And they're kind of like in their little sandbox, but they're not really kind of native and kind of core to the operation of that business or to the feature set. To the earlier point that we made when it came to buy, sell of different cryptocurrencies, I would argue that you all are quite a bit ahead of that. But we zoom out a year, 2 years. Are you trying to push the default behavior into Pi USD, or is it 10%? Is it 80%? Like what I think for you all is going to move the needle in terms of like adoption and utility of this kind of back-end products in the different wallets?
Yeah, we don't do pilots, Ryan. We ship products. When we ship something, it's because it's ready, it's production grade, and it's ready to be available for the general population. And that is a constant. And if you think on, and we're not probably very good at doing headlines. We prefer to be doing the product side. Every product that we have announced and that we have launched has started the same way. If you look back 4 years, It starts with a 1% ramp. It ramps in a few weeks. It becomes generally available. And then on top of that, we build something else. It started with buy wholesale without on-chain transfers. It went to Venmo. It went to the UK. It went to Luxembourg. We added on-chain transfers on PayPal. Then we added on-chain transfers on Venmo. We launched the stablecoin on PayPal. We launched the stablecoin on Venmo. You can extrapolate from those points about which things are going to be happening next. But absolutely, one of the things that we want is we want to make the PayPal stablecoin available in as many PayPal experiences as possible, because we think that's how we help everybody in this room and how we help adoption from the consumer side. And also, there are things that are going to be happening that this is a platform product. So you put it out there. That's one of the reasons that we were very intentional about deploying on Ethereum and not having a PayPal protocol and building this on permissionless environments, because we want developers to build on top of that. I'm just coming today from an event that we have for developers at the PayPal office here in New York, and you see the community starting to work on that. It's fantastic. The other day, there was a crypto payment service provider who said a press release that say, hey, we have enabled PayPal USD on the platform. We didn't do anything. We didn't talk to them. They just got the thing out there, enabled, it's a ERC20 token, and they run with it. So there is going to be, on our side, there is absolutely a roadmap of products. And one of the questions that we all have is, if you are interested in doing this for payments, gas fees are a constraint. And one of the discussions that we are having is, where do we take this next? And it's a conversation that we are having with developers, because we have been very adamant that we don't pretend to tell developers where to go. They tell us where to go. And we're trying to figure out which are the protocols that the community is supporting now. But I was in Asia last week. I look at 3 exchanges in Asia that are now supporting Bitcoin to pay USD trading that I have not heard about. So there is the part that we direct and the part that we implement on our side, and then what the community decides to do with the token.
The timing of this whole partnership is also interesting in 2 respects. One is, maybe you'll correct me, the wind down. Can I say that of Binance
Wind
USD?
down, yeah, that's
okay.
right, yeah.
And then the other is thinking about the timing of the stablecoin bill and that conversation in Washington, D.C., where having someone like PayPal issue with Paxos, with the state trust charter model that you have, is essentially, I would say, almost like a pretty big corporate endorsement of the state-level stablecoin issuer model that is very much up for debate and is becoming a contentious issue down in D.C. when it comes to how this is ultimately going to get regulated. So how do you all think about that conversation now? Because it feels like we should have stablecoin legislation in the U.S. It's a massive market, massive buyers of treasuries. It is a killer app that has clear product market fit. And I would say it's like we can't get out of our own way as a country in D.C., but I know I'm putting my thumb on the scale, and we're probably all going to nod violently with each other. But how do you think this advances that conversation so that we don't run into an issue where you need to go to the Fed every single time there's a single entity that wants to issue a stablecoin, and they basically just wait for 11 years for approval that never comes, versus this kind of state model that I think has allowed you to come to market significantly faster?
Well, we think it's a critical conversation, and
and maybe just for the benefit of the audience, just like the quick, I just teased it a little bit, but the 30-second difference right now in terms of Paxos versus some of the other stablecoin issuers in terms of the state versus kind of federal charter, because it's important.
So the difference of Paxos issued stablecoins is that we do it from a trust company, and in our case from a New York trust company that acts as a prudential regulator over the issuance of the tokens, compared to other stablecoins like Tether and USDC, which don't have a prudential regulator, or in some cases have a patchwork of MTLs, or BitLicense, or MTL-like licenses to operate these stablecoins specific to certain markets. And that really highlights the difference, which is the specific to markets, whereas the prudential oversight means a banking regulator, the New York banking regulator, NYDFS, is overseeing everything that's involved in the issuance of our stablecoin, in addition to regulating prudentially the regulator. And so that means anybody who holds our token anywhere in the world, you have the confidence and safety knowing that the New York regulator is regulating us in issuing that product to you. versus an MTL where if you live in Alabama and you have a stable coin and it's being issued to you by someone with an MTL, you might be protected. But if you're in Mexico, that doesn't matter. You just have a private liability governed by some terms and conditions.
Yep.
And so that's been a real differentiator for the way that we've operated our entire business, including our wild infrastructure, tokenized gold, et cetera. And I think that there's no company in the space that's more pro-regulation than Paxos. We've been regulated. We were the first company in the space to get a New York trust. We have licenses around the world with other prudential regulators as well. And we think that this debate that's going on and the stablecoin regulation is absolutely critical. And to your point about preserving the state pathway, we think that's of utmost importance. And what that effectively means is that similar to what is the case in our dual banking system is that issuers that are regulated by state regulators that meet a certain standard, which may be set by the Fed or other federal governing agency, can govern the issuance of stablecoins, not only the Fed. The Fed or some other federal agency can do it as well, but we need to preserve the state pathway so that properly regulated state financial institutions can also compete and innovate in this space.
How important was that? Amen, yes. How important was that for your team, thinking about this kind of legal area? Because, I mean, you're talking about like real systemic, risks and opportunities, right? Everybody always says systemic risks of crypto, but the systemic opportunities, how about? So that model is not a trivial, like, back office, like,
Isn't that fantastic
nuance.
how in the same conversation we say 45 million and then we say systemic?
Yeah, exactly.
Look, we are
I made the joke with Jeremy earlier that, like, we need legislation that will protect stablecoin issuers from the systemic threats of the banking system based on what we saw in March. So it's not just...
Yeah, so a few things there. We are PayPal, so we operate in about 200 countries. And financial services, in general, as an industry, they don't travel that well. I don't know many financial institutions who operate in more than 160 countries. So we have the privilege of having a vantage point to see how regulation is evolving in the world. As a general statement, and I will qualify the general statement, the US is behind other markets in the regulation of the space. So if you look at what's going on in Europe, you look at what's going on in Japan, you look at what's going on in Singapore, there are markets that are moving faster in that direction. And now let me qualify the statement. There is a reason why we came to New York. I think that the structure that is put in place in New York is second to none. The framework is robust, the framework is strong, and we think there is a fundamental difference between having a stablecoin that is issued under supervision by NYDFS, issued by a trust that is subject to prudential supervision. That is, in my mind, that's the golden standard. The market should not be constrained by options that are either offshore with limited transparency and lack of clarity of what is there, or stablecoins that can be issued from any MTL in any state or an LLC. I don't think that actually you need an MTL license. You can do it from an LLC. So we need some level of harmonization in the space. Mm-hmm. And quite frankly, that is part of the conversation that is going on in Congress, and is the type of conversation that should go on in Congress. There are actors who are in favor of federal oversight of the space. I think that after our appearance in the market, Ranking Member Waters said, hey, we are concerned that this is happening before there is a federal framework. There are others in Congress, both Democrats and Republicans, who favor a state option. And look, that is Congress at work. That conversation should happen in Congress. I think that we would all like that it wouldn't take 3 years to get the legislation in place. I do think that in general the US now is behind, not in all places of the US, but in general behind. But I don't think it's a lost cause by any means, and there is a window for the US to regain that position. Because again, stablecoins now are the killer application of blockchains. They are going to be fundamentally important for the status of the dollar as a global reserve currency. And I want it all. I want stablecoins, I want tokenized deposits, and I want CBDCs. I don't think that we need to choose between those.
We're going to get to CBDCs in a minute. One quick question, though. It feels silly to even ask this, but did you get a no action letter from the SEC, or so you're just rolling the dice that a stable coin is not an investment contract? That's bold in this day and age.
We feel very strongly that the construct that we have for our stablecoin is not an investment contract, it's not a security.
Okay, so no action letter, but hopefully common sense will eventually prevail. Let's talk about CBDCs since you just brought it up. I think this was one of the questions that I got on Twitter that people wanted to hear asked, and that is, given the strict oversight that you have with the trust company, Walter, and I'm sure this is going to extend to PayPal's own AML and compliance standards. What are the key differences between a well-regulated, tightly regulated stablecoin like your partnership and a CBDC? Because there are privacy concerns. I think there are seizure concerns that some people might have. And how do you think about the real risks there? How do you communicate the difference between a top-down CBDC and something like this that's a private partnership?
I can give you my view, and then maybe Walter. When you think about that, the fundamental difference is a payment stablecoin is something similar to electronic money. It's a payment instrument. Electronic money is a figure that is well understood in Europe and in other regions. Sadly, we don't have that. The closest that we have in the US is store value, which is more similar to a prepaid card. So in my mind, a payment stablecoin is electronic money. It should be a payment instrument. It should not be taxed when you're paying. You should not need to file taxes when you're buying something with a stablecoin. A tokenized deposit is commercial bank money, meaning that it has commercial bank risk. And when you have a tokenized deposit from one issuer, it's not necessarily the same that a tokenized deposit from a different issuer. It's commercial bank money. When you have a CBDC, the most important thing on the CBDC debate, in my mind, is not the surveillance discussion, is that it's central bank money. So it's a claim against that state, against that central bank. And I think that many of those things, again, don't fight each other. I could totally see an environment in which, when there are CBDCs out there, that there could be private stablecoins where the reserve is a CBDC. There's no reason why that could not be the case. Payment stablecoins and tokenized deposits are useful for different things. Tokenized deposits, they are deposits, so the underlying asset is part of a fractional reserve, is being lent out. There are a number of implications there. I think there are a beautiful use case for interbank settlement. I don't know that they are a retail instrument.
Yeah. Well, we're going to have a whole session tomorrow with Chris Giancarlo, former CFTC commissioner, current Digital Dollar Project's founder and lead spokesman, I guess. I'll get his exact title right tomorrow when I'm introducing him on stage.
Crypto Dad.
And it's in front of me. But hopefully the next SEC chair too. Anyway, we'll see. I don't know if you want to chime in on anything in that last question, Walter. Otherwise, I have one more for you.
Well, I would just say that central banks create money. Paxos is a trust company. Issuing stablecoin is not creating money. We're just taking a dollar that's sitting one-to-one backed, and we're putting it onto a decentralized database so it can move around. And so I think that they can coexist. They can be different things, but we certainly shouldn't close out the innovation that can come from the private sector, especially when it's done in highly regulated ways to compete and advance the interests of the country, of the industry, and for the sake of innovation. And if you look at what's been achieved over the past 6 years of stablecoin to where we are today, that PayPal has a live stablecoin in the market, it's an unbelievable series of innovations that have gotten us there. And what we'll achieve in the next 10 years is really, really important, and in many ways will be more important. And so it's important that the regulation that we have, or the CBDCs that come to market, don't close out the ability for the private sector to compete.
Ethereum is the largest network in crypto. You're starting on Ethereum. What are the decision points that will see additional networks supported with PyUSD?
So for some of the use cases, Ethereum does a fantastic job. I've been in the past stating that I do think that one of the important use cases is going to be B2B payments. For B2B payments, if you're moving $10 million cross-border, Ethereum works fantastically well. If you're doing remittances, or if you are paying gig economy workers, or if you are paying Etsy sellers, or if you are sending out $100 or $200, the Ethereum fees are expensive. So what is important for us is throughput and scalability. If you're in retail payments, you need to be able to sustain at least 1,000 transactions per second. And there are protocols who can sustain that. There are not too many, but there are a few already. The other thing that we need is protocols that are battle tested, that have been around for long enough that the security aspect is not a concern. I'm not talking about the securities aspect, but security of the protocol itself, transaction fees, obviously, and then the regulatory aspect of the protocol, whether it's a protocol that is approved by regulators, or it's a protocol that there is clarity, again, going back to the securities law. So the characteristic of the token itself, the security of the protocol, the throughput, transaction fees, those are some of the key parameters in my mind.
What other networks will you support?
Today, just Ethereum. We are adding additional blockchains over the next couple quarters, and we're excited to get PYUSD as well as our other stablecoins onto those blockchains.
Gentlemen, congrats on the announcement, the partnership, and that concludes our session. So thank you very much, and looking forward to seeing the progress the next year.
Thank you, Ryan.
Thanks a lot.